While you were sleeping, something unprecedented just happened in crypto. The United States Department of Commerce, yes, the actual government, just started pumping real-time economic data directly into blockchain markets. We're talking GDP numbers, inflation data, consumer spending metrics flowing straight into DeFi protocols, and the token that's positioned to capitalize on this seismic shift, SEI just rocketed over 12% this week, and we're barely getting started. The implications are massive, the technical setup is screaming bullish, and institutional money is already positioning. Stay with me because this could reshape how traditional finance meets decentralized markets forever. Alright, let's break down exactly what's happening because this isn't your typical crypto pump, this is infrastructure evolution in real time. SEI Network just integrated Chainlink Data Streams, but this isn't just another Oracle partnership. We're witnessing the first time in history that official United States government economic data is flowing directly onto a blockchain network. Just think about that for a second. Bureau of Economic Analysis data, the same numbers that move trillion-dollar traditional markets, now accessible to any decentralized finance protocol built on SEI. The technical architecture is, honestly, fascinating. SEI's sub-second settlement capabilities combined with Chainlink's institutional-grade Oracle network create something we've just never seen before. Real GDP levels, personal consumption expenditure index, real final sales to private domestic purchasers, all updating in real time on-chain. For a bit of context, SEI has been positioning itself as the fastest blockchain, with parallel transaction processing and optimized for trading applications. But this Chainlink integration elevates it from just another layer 1 to potentially the backbone of institutional DeFi adoption. The timing couldn't be better. We're in a market cycle where institutions are desperately seeking blockchain infrastructure that can handle traditional financial data with the security and transparency they require. SEI just became that bridge. Now, before we get carried away with the fundamentals, let's dive into what the charts are actually telling us because honestly, the technical picture is equally compelling. And yeah, slightly terrifying if you're not positioned correctly. SEI hit a critical test last Saturday when it dropped to 28.6 cents. That's the 200-day exponential moving average, a line in the sand that separates bull markets from bear markets. And guess what happened? Perfect bounce. We're talking textbook technical analysis here. Since that bounce, SEI has climbed over 12% in just 4 days, currently trading around 32.5 cents. But this is where it gets interesting, and where most retail investors get it wrong. Open interest in SEI futures just spiked from 230 million to 285.92 million, the highest level since August 25th. For those who don't trade derivatives, rising open interest means fresh money is entering positions, not just existing traders shuffling around. But the real kicker is the long-short ratio hitting 1.20, the most bullish positioning we've seen in over a month. Smart money is loading up, but retail is still sleeping on this setup. The relative strength index sits at 57, comfortably above neutral but not in overbought territory. There's room to run. The MACD just flipped bullish on Monday with rising green histogram bars. This is momentum building, not fading. However, and this is crucial, we're approaching a descending trend line that's been capping rallies since the broader market correction. This is make or break territory. While everything looks bullish, let's address the elephant in the room. We're still in a macro environment where risk assets can get hammered without warning. If SEI fails to break above that descending trend line, we could see a rejection back toward the 200-day EMA at 28.6 cents. That's a potential 12% correction from current levels. The cryptocurrency market correlation with traditional markets remains high, and honestly, any negative macro surprise could derail this technical setup regardless of how bullish the fundamentals appear. But assuming SEI breaks above resistance, and, all indicators suggest it will, we need to talk about the price targets and the bigger picture thesis, because this could be the beginning of something extraordinary. If SEI clears the descending trend line convincingly, the next major resistance sits at the 50% Fibonacci retracement level around 43 cents. That's a potential 33% gain from current levels. But the really interesting target is the 618 Fibonacci level around 52 cents, a level that would represent a new cycle high. This government data integration isn't just a technical upgrade, it's a paradigm shift. For the first time, institutional players can access the same economic data that drives traditional markets, but with the programmability and transparency of DeFi. Imagine automated trading strategies that, adjust positions based on real-time GDP data or lending protocols that modify interest rates based on actual inflation metrics rather than speculative feeds. So we're talking about bringing Wall Street's data infrastructure to DeFi, but with, 24/7 accessibility and transparent execution. As more institutions recognize SEI's unique positioning, we should see a network effect. DeFi protocols will migrate to access this government data, institutional traders will follow the infrastructure, and, retail will eventually follow institutional adoption. The SEI Development Foundation's statement about positioning at the forefront of a new era where traditional financial data and high-performance blockchain infrastructure converge isn't just marketing speak, it's actually a roadmap. However, let's be brutally honest about the risks. Regulatory uncertainty around government data in DeFi remains. If authorities decide this integration creates compliance issues, it could halt momentum instantly. Additionally, SEI's success depends heavily on execution. Having government data is meaningless if the network can't handle institutional-scale transaction volumes, or if developers don't build compelling applications on top of this infrastructure. We're also operating in an environment where Federal Reserve policy significantly impacts risk asset valuations. If macro conditions deteriorate, even the most bullish fundamental developments might not protect against broader market sell-offs. So the convergence of government economic data with decentralized finance infrastructure, it represents a potentially massive shift in how financial markets operate. SEI's technical setup, combined with this fundamental catalyst, creates a compelling investment thesis for those willing to manage the associated risks. It's really something to think about, isn't it? The derivatives market positioning, technical indicator alignment, and successful test of key support levels all point toward continued upward momentum. If SEI breaks above the descending trend line, we could see rapid appreciation toward the 0.43 to 0.52 range. But remember, cryptocurrency markets remain volatile and unpredictable. This analysis represents current market conditions and technical setups that can change rapidly based on macro events, regulatory developments, or simple market sentiment shifts. The institutional DeFi thesis is compelling, the technical setup is bullish, and SEI appears positioned to capitalize on both. Whether it executes successfully remains the trillion-dollar question. Crypto disclaimer. This content is for educational and informational purposes only, and should not be considered financial advice. Cryptocurrency investments are highly speculative and volatile. Past performance does not guarantee future results. Always conduct your own research and consider consulting with a qualified financial advisor before